What's up, guys? Today we have another very special video for you. We are going to be talking about Tesla stock, and I don't do a whole lot of videos on Tesla. Personally, I've been burnt by it in the past a couple times and kind of got away from the stock, sadly, right when it made a tremendous run up. So I never actually bought in, and I've kind of looked at the stock and it's always had a high valuation. So today we're going to get into where its valuation is at right now, where it could be headed in the future, and basically what price levels I would personally be looking to get into the stock at. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at their chart. We can see that Tesla today was down 1.63% and almost another 0.5% after hours. And here we have some interesting numbers. So we'll take a look a little bit more in depth at some of these, but market cap, they're sitting at $564.62 billion. PE ratio, this is the trailing PE ratio, is sitting at 55.51, which is below a key mark that I've indicated before on this channel. If you read The Intelligent Investor, you'll see that they talk about a 60 PE ratio being unsustainable over the long term. So they've just now passed under that. They're sitting at 55. And then we have their 52-week high of $402.67 and their 52-week low at $176.55. So this is very interesting. Again, we can see that that is down over 50% from their 52-week high, and we are sitting very close to this 52-week low. Again, over the last day, they're down 1.63%. Over the last 5 days, they are down 6.54%. Last month, down 13%. Last 6 months, down over 18%. And then over the last year, they are down 53.27%. So absolutely huge move down from them overall. We could see here that this isn't even their 52-week high. We could see that that probably came somewhere, in here in January, that they spiked up, hit that 52-week high, and then they've basically just been running down ever since. And we can see a very interesting trend because they keep topping out. So there's this quick run up, and then the stock kind of sells off for an extended period of time, and then there's a quick run up, and then the stock sells off, and then this was kind of a sustained move up, and then there's been a sustained move down after it. So they're creating kind of lower highs and then lower lows, which is very interesting. Not something you want to see if you're bullish on a stock. That obviously means that the stock is trending down, but the question is, will there be a reversal anytime soon? And if we zoom out a bit, we could see that maybe there won't be a reversal anytime soon. So if you believe in technical analysis, then what you'll know is there are certain points of resistance and support that a stock will make up. And we could see that kind of the $200 mark was a point of support. So kind of in here, we see a little bit of support at the $200 mark. And then in here, we could see a similar point of support, around that $190 to $200 mark. After that, there really is no support for the stock. We could see that it ran all the way from 140 up to $300 back here in 2020 to 2021. So really this would be the next part of basically position of support, and that would be around the 140 kind of 150 mark. So it would appear, again, by technical analysis, that this stock would have potentially around $30 left to run to the downside before it would hit its next level of support. Here's a quick look at their market cap and their forward P ratio. Again, that was a look at their trailing P, so we can see that 55 number sitting right here, and trailing P ratio has been all the way up to, you can see 300, 400 trailing P ratio, which is absolutely insane for a stock. Forward P ratio is a lot more interesting. So right now they're sitting at a 33, and this is a very interesting number because a couple years ago, when basically interest rates were really low, even a year ago, we saw Google, Apple, and some of those other big tech companies sitting around a 33 forward P ratio. And now Tesla's gotten to that number. So that's a very interesting valuation. Obviously, the interest rate environment has changed a lot since then. So, now those companies like Google and Apple, they're sitting closer to like a 20 P ratio. But it's interesting, to see Tesla actually get down to that mark. They've never really been there in the past. They really just started, earning money maybe 3-4 years ago, like 2018, late 2018, 2019. And then ever since then, they've traded at a very, very high PE ratio because the stock just made a massive run up. And then it's also very interesting looking at their market cap. So they are sitting again around that $550 billion mark. And we can see as of, about a year ago, they were sitting around a $1 trillion market cap. So very interesting that they are, sitting at the lowest market cap that we've seen in over a year. And before we jump into some of our valuation calculations, let's take a look at where they're projected for earnings. I always like looking at where the earnings are going to come in or where they're projected to come in. We have 25 analysts covering the current year for Tesla, 26 for next year's estimates. And what we could see is that their average estimate right now for the current year is $4.10 of earnings. And then for next year, it is $5.64 of earnings. And then we could see a low estimate for next year of $4, basically $4.10. So maintaining where they were at this year. And then for next year, a high estimate of $7.97. So that is very interesting. That's a very high estimate, $3-4 over double what the low is. So that's very, very interesting. With those earnings numbers, we can calculate PE ratios and get an idea of where Tesla could be next year based off its current price. So right now it's sitting at $180. And then we have a few earnings projections. So this is obviously the earnings for this year, and it was also the low estimate for next year. So if they capitalize and make $4.10 this year / next year, they would be sitting at a 43.90 PE ratio. So again, a little better than that 55 number that we see for the trailing PE ratio for this current year. But still a little bit on the higher side. And then that middle range, the average estimate was $5.64 for next year. They would be at a 31.91, which again isn't unreasonable. We saw a lot of those bigger tech companies, Google, Microsoft, Apple, they all kind of sat around that 31, 32 mark a year ago. But again, that was a whole different interest rate environment where borrowing was a lot easier and growth was, easier just because you could get your hands on money for a lot cheaper. And then this last number is very interesting. So if they are able to come in with very good numbers for next year and basically capitalize and make $7.97 per share, they would be sitting at a 22.58 PE ratio, which would be very low. Generally, a 20 to 25 is a very interesting range for a stock, especially a stock that has a lot of growth in front of them, right? If Google and Apple right now, they're sitting around a 20 PE ratio, and Tesla potentially has a lot more growth in front of it. They have a lot more businesses that they're still developing, that they're working on growing. So a 22 PE ratio for a stock like Tesla would be, a very good valuation on it. So we can also kind of do the reverse calculation. So we could take the current stock price of Tesla, which again is $180, and then take the current PE ratio. So this is the forward PE ratio, and say they're sitting at a 33.11 PE ratio. And then if they potentially go to a 20 to 25 PE ratio, and again, this is a 20 to 25 PE ratio with their earnings staying stagnant, right? This 22 PE ratio over here is with their earnings increasing massively and the price staying the same. So if the price stays the same, the earnings increase massively, you'd end up with a 22 PE ratio here. If their earnings stay the same, but their PE ratio change, and basically the market says we're no longer going to value you at a 33 PE ratio, we're going to instead value you at a 20 or 25 PE ratio, obviously the price has to drop. And the prices that we would get to are listed here. So at a 20 PE ratio, the stock would drop all the way down to $108.73. And at a 25 PE ratio, we would see the stock drop down to $135.91. So this is very interesting. Personally, I look at the range here, and I'm kind of looking at it. Once the stock gets below $150, I would start getting very interested. We start getting closer to that support level that we mentioned here on the chart. Again, that's that 140 to 150 kind of range in there. And then it's also very interesting because if they start capitalizing on their earnings, right? So they start coming in higher and in, the range of $5.64 anywhere to this kind of $8 mark, we could see the PE ratio drop down to around a 20 PE ratio. So that would get very, very enticing for the stock because, again, Tesla, in my opinion, has a lot of growth ahead of it. Personally, I do not own Tesla. I like the stock going forward in the future. I think it has a lot of potential. It's just been priced at a very high valuation for a very long time. So it's interesting, that it's starting to come down and starting to get to a price level that's, more in the range that I'd consider reasonable. So again, all my opinion in this video. Let me know your thoughts down below. I'd love to hear if you are a Tesla stock owner owner, if you are thinking about jumping into a stock like Tesla, or where your thoughts are on it. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.